Welcome back to Talk Nerdy to Me, a financial guide for entrepreneurs, where we dive deep into the financial issues that small to mid-sized businesses and high-growth companies face. And then what do? We explore practical solutions to overcome them. I'm Michelle Delker, founder and CEO of the Stanley CFO Group.
Hi, everyone. I'm Robin Keithley, the VP of Operations. We're excited to dive into today's topic, FP&A and forecasting, one of the most important tools for running a successful business.
Absolutely. FP&A, and those letters stand for financial planning and analysis, might sound intimidating, but at its core, it's really about understanding where your business is headed and how to get there. So it's about making decisions with confidence.
Let's start with why FP&A is such a game changer. Unlike accounting, which looks backward, historical, FP&A is all about looking forward. It's basically your crystal ball to the future.
Ooh. Not like Madame Chloe.
Everybody loves a good fortune teller now.
Or was it Cleo? Who was it?
Yes.
Cleo. I agree. Strong FP&A helps you plan for growth, manage risk, and seize opportunities. Without it, you're essentially flying blind. Do you remember we worked with a company, and this isn't a unique story, right? A lot of times people reach out for this exact reason. They're in the midst of incredible growth. This particular company was growing 50% year over year. And they thought that their current line of credit was sufficient, but it wasn't, which is why they reached out because there were other indicators that maybe something wasn't flowing as it should. When we sat down and we created that cash forecast, we discovered that they were really headed for trouble.
Right, because growth doesn't just mean more revenue. It also means more expenses, bigger cash flow requirements, and sometimes thinner margins. Forecasting showed them they needed a much larger LOC, line of credit, to keep up.
So glad you defined that. And once we addressed it, they were able to focus on growth without constantly worrying about running out of cash.
So who needs FP&A?
Honestly, I think almost every single business, high growth companies, startups, even mature businesses that are at inflection points, like they're launching a new product, they're entering a new market, or they're undergoing a restructuring. For me, it's anyone who's not steady state status quo.
And who is that? Yeah. If you're making big moves or trying to optimize operations, forecasting is critical. Before we go further, let's take a moment to clarify something we hear a lot, the difference between accounting and FP&A.
I think this is such a great point. I mean, in general, there's a lot of confusion, I think, in finance about what different roles actually do.
It's just all the same, though, right?
A lot of people, like, if they see me out between February and April, they're like, shouldn't you be working on taxes? Well, we're always under a deadline. That would be just one of many. But we all do different things. And I think great point. So accounting is about looking backward, really. It's your rear view mirror. It's focused on, if you're super nerdy, you love it. I mean, it makes the world go round. Recording, categorizing, and reporting historical financial data. So income statements, reconciling the balance sheet, taxes, as we just referenced. So it's getting everything to where it needs to be. And we know, while it's not sexy, nobody gets excited about accounting. It's critically important.
Well, it's more my favorite.
Excuse me.
These are the numbers. This is what they are.
It's true. She does indeed love it. And I think it's just so important because if we don't have that solid foundation, I mean, we have absolutely nothing. So you have to do the work before you get to the sexy.
Yeah. So FP&A, on the other hand, is forward-looking. It's like your GPS helping you plan the road ahead. FP&A focuses on forecasting, budgeting, and analyzing trends to make strategic decisions.
You just said that, you love the accounting piece of it. And so we were talking about the difference. And they're different disciplines. And a lot of times they're separate and distinct. There's not a lot of cross-pollination. Separate education, separate experience. With accounting, there's always a right answer. It's pretty black and white. Whereas with finance, it's, well, what do you want the answer to be?
Right.
How can we get there? And so a lot of accountants who like always having that right answer maybe aren't necessarily finance minded. So it's interesting because when you find overlap between the accounting and finance and someone who can really pull in the technology piece, it's a dynamic combination. I mean, that's really the magic. So again, most accountants aren't necessarily finance minded, but they are incredibly skilled in ensuring the numbers are accurate and compliant, which again, super important. But forecasting and strategic planning require just a different mindset and a different skill set.
So you're right. So you need both accounting and FP&A to succeed. Accounting is the foundation, but FP&A builds the strategy.
Yes, no doubt. So now that we've clarified that like some butter at a fine dining restaurant, let's talk about the components of FP&A. At a high level, it's really about strategic planning, aligning with your long-term vision. Clean the glasses, baby. It's time. And then also tactical planning, right? Because strategy is great, but let's figure out the short-term steps to ultimately get us there.
And that includes the budgeting, the forecasting, and scenario planning.
Talk nerdy to me. Yes, all of it. My father-in-law used to tell me it was last year's numbers and 3%.
Aww.
Yes, yes. You need to think dynamically, truly, what's changed in your market, what's changing in your business, and then you need to incorporate those changes into what you think you're going to be able to do. And to be clear, like budgets aren't static. Do you know? A lot of organizations will spend a significant amount of time preparing a budget, and then they'll reforecast quarterly because there are sometimes big things that originally we had anticipated would come to fruition, and they don't. And we essentially need to recast. Otherwise, we're going to be miles apart all year long.
Right. Yeah, forecasting takes it further by projecting what might happen based on different variables. For example, what happens if your sales drop by 10%, or if a key supplier raises those prices.
And it happens all the time. I think I just paid $7.50 for a kid's chicken tender meal. You know, there's like
$750.
$7.50.
It probably feels like $700,
which was just mind blowing to me. But apparently, there's still a chicken shortage and all of the things, right? So yeah, I think great things to consider. And for me, I would say like, it's just not a set it and forget it. It's not a necessary evil. It's a key tool that needs to be leveraged in most conversations, right? Mm-hmm. Finance really is the numerical representation of the results of operations. Okay, so that brings us to scenario planning. Probably the most dynamic, really asking what if. It's like a stress test for your business. And I mean, sometimes it's good to have a defibrillator on hand. Clear.
Of course. FP&A isn't without its challenges. One big hurdle is data overload. Businesses have so much information, but don't always know how to turn it into actionable insights.
I mean, yes. Oh, we have books and books of, you know, information and data. And it's like, well, that's great, but what does it all mean? What's it going to do for us? And I think that's really where prioritization comes in, developing that order of magnitude. What's most important? Develop a handful of key metrics that when you're ultimately triangulating, they're telling you a story, they're painting a picture. So maybe revenue growth, expense trending, cash flow, obviously, is always going to be central to everything that we're looking at.
Mm-hmm. Another challenge is cross-functional alignment. Finance can't operate in a silo, shocker. You need input from sales, operations, and leadership to create a forecast that reflects reality.
I think that cross-functional alignment is also another game changer. I mean, our industry has evolved so much, our profession, over the last several decades. And it really did used to be like, oh, that's so-and-so from accounting or so-and-so from finance. But today, the role with the right professionals can be transformational, truly a dynamic partner to have at the table, because understanding the numbers and then coupling that with understanding the business, its goals, leadership, their appetite for risk, all of those things. I mean, it's all there. It's truly magic. Magic. Speaking of magic, let's not forget about technology. So we love Excel. We're in Excel all day long. When I was pregnant with my second baby and didn't know what to name her, I actually downloaded 50 years of the top 100 baby names from the Social Security Administration and then did like a retro analysis to try to project what popular names would be in the future. So we didn't give her too common of a name because, you know, I'm Michelle. My husband is Mike. I mean, there were like 100 of us in each of our graduating classes. Okay, so it can take you far, but only so far. There are other softwares and technology that have truly been game changers for businesses that are ready to invest in FP&A. Oh, it says here, Optional tangent, technology versus antiquated practices. I think this is something great to spend a minute on too. And you probably know the example I'm going to bring up because it's just so straightforward. So talking about how things in our profession have changed, things in the world have changed, just period. And it used to be that we would need teams of people to perform very manual tasks, right? Like, so take accounts payable, for example, the folks that are processing the invoices that are coming into your business for payment. I've walked into companies today, big companies, $100 million, $200 million companies that still have teams of people that are processing the accounts payable. And it's very expensive to process because it's just manual, right? It's a lot of data entry. And quite a few years ago, there were some technologies that came out, OCR, optical character recognition, where you have a software that will ultimately scan the invoice. It'll read the pertinent information from it, like the vendor, the invoice number, the amount, the payment terms, and then it will route it through a workflow. What? Checks and balances, internal controls, a workflow, not a workflow. Yes, a workflow. Mm-hmm. So it is reviewed and approved by the right parties before it loads into the system to ultimately be paid. And we've implemented that at a couple of different organizations. It's been great because it cuts down on errors, right? Mm-hmm. Manual work is fraught with opportunity for mistakes. It allowed us to build a scalable, sustainable infrastructure. So it didn't matter if we went from 1 to 2 to 300 million, we could still leverage that technology and have fewer folks dedicated to more of a data entry type position. And then we can let those folks really operate at the top of their license because labor is expensive and we want our labor to be doing the thought-provoking work, right?
Right.
Resources are not unlimited. That was the optional tangent.
Oh, okay. Well, I mean, I've just seen over my career how things have changed. You remember having to print all your journal entries and saving them in a file and then boxing them up and sending them off to storage. I'm sorry, but those days are over. We have the option to publish to PDF,
Yes, she's making fun of me.
Yeah. And, various accounting systems, even QuickBooks, you can attach everything within that system. It's just a file that's attached that you can recall later if you need to look at it. To see what happened, or if you were in an audit and the auditor wanted to see the journal entry support, it's all there. There's no more time wasted with the paper printing and the stapling and the filing. It's just not there anymore.
Right. I think that's a great point. And I remember we implemented an FP&A tool when we were together working for another organization. And we implemented it for one reason, but we were able to leverage it in so many different capacities. I remember it was really central to helping us when we were working through the pandemic. We had received just a significant amount of CARES money, and we were able to track it through that particular system. So just a benefit all around. I can't even imagine what it would have looked like to try to track and consume $50 million from, however many different legal entities without a centralized tool.
And there are probably people out there that did.
Oh, we know.
We're going crazy about it.
We know. It was on good old-fashioned Excel. All right, so optional tangent complete.
Yes.
Check. So what makes a good forecast?
First, data quality. Your forecast is only as good as the numbers you put in. If your accounting is shaky, your data quality won't be great, and your forecast will be no bueno.
I agree with you. Truly, it's all for naught. If the information that we're analyzing and we're drawing conclusions based off of is not accurate and or complete, we're wasting our time. So be smart, truly invest in having a solid foundation with good, clean information. Without that, you are essentially dead in the water. You're making decisions based off of feelings, not facts. And that doesn't always work out.
Right. So make it dynamic. Update your forecast regularly, monthly, quarterly, weekly, whatever, to reflect changing conditions.
I mean, there are some things that we touch every day.
Every day.
I mean, cash forecasting, for example, depending on the size of the organization and their liquidity position. But other things, yeah, maybe weekly, sometimes monthly. But again, never set it and forget it. We don't print it out and put it in a drawer. Right. And then my favorite is collaborate. So earlier talking about, how our profession has evolved. really allowing your finance function to be part of the team, to sit at the table and to have those conversations. Because forecasting, it's not just a finance exercise. It's a collaborative conversation with the whole team. Tell us, what do you think is going to happen? Right. What do we need to do to enact that type of change? And then, we're just putting the numbers on the page to reflect the plan, essentially.
Right.
But never should it be, the tail wagging the dog, where someone comes up sort of in a vacuum with, this is what it's going to be.
Right.
And gosh, how many times have we seen that happen in the past, right? So no, collaborate, stop, collaborate.
And listen. So you mentioned a good tip, starting with cash flow forecasting. It's the lifeblood of every business. Know when cash is coming in and when it's going out. I know I said earlier that accounting was my favorite part, but this is my second favorite part, is cash flow forecasting.
I know. Okay. I'm keenly aware, yes. She will forecast as often as she can. And sometimes we call it forecasting.
Yeah, so let's address some common misconceptions about FP&A.
So just in general, this is a big one. Forecasts have to be perfect. Let's be clear. Nothing is going to be perfect. Mm-hmm. It's just not true. Forecasting, it's about direction. It's not about perfection. It's really okay to adjust as you go. And beyond being okay, it's encouraged. Things are constantly changing.
And another misconception, it's only for the big companies. In reality, small and mid-sized businesses can benefit just as much, if not more, really.
I agree completely. I marvel at these beautiful little organizations that are getting just like a PDF balance sheet and income statement and no conversation.
Just checking a box.
Yes, it's PDF. There's no conversation. There's no trending. There's no insight that accompanies it. Where's the management discussion and analysis? Here's what it means. Here's what these numbers mean. Mm-hmm. Here's what I see. What do you see? Again, that's where the collaboration comes in. What does it mean? How can we change it? So, all of that just fits together. Real life stories. Oof, girl. So we have a lot of stories, I think, to illustrate the power of FP&A and just stories in general. We've known each other a long time.
We do.
So do you want to talk?
Sure. One success story that comes to mind is a client who is struggling with seasonal cash flow issues. With forecasting, we help them smooth out their cash flow and avoid borrowing during their slow season.
And we actually, we shared a forecast. I think that relates to that particular example in a prior episode, right?
We? Look at us.
Yes. And so, gosh, let me see. Let me look in my little brain. It was a professional services organization who had really lumpy revenue. They received probably, 70% of their revenue during the first 3 to 4 months of the year. Mm-hmm. And then towards the end of the year, they were really struggling because there hadn't been, I would say, maybe prudent cash management. Mm-hmm. And so we were coming in and looking at, okay, from an operational perspective, what expenses can be mitigated to get them through the rest of the year. And then it was okay. I remember so clearly because it was like you were sitting over there with the ruler sort of waving it in the air. It was like, okay, what can we learn from this and what could we do differently? Right. And so that was a great exercise and it helped us put a wonderful plan together for them for 2025. Mm-hmm. Don't be rolling around in the bathtub with all those dollar bills.
Mm-mm. Spread it out. Put it some away for a rainy day.
I remember a company, they didn't invest in FP&A. I don't know if you'll remember this. They invested in business intelligence and BI. And there was no finance professional that was involved in the implementation. And so BI a lot of times can facilitate FP&A. So business intelligence, taking all of those maybe disparate systems, plugging them into centralized reporting program and then being able to adjust the information to view it however you want to view it. And so we had a really incredible technology professional come in and create the connections, but no finance or accounting person that went in and tied back the information. Yes. No one that went and tied back the information to the underlying subledgers. So this is a really important thing, right? Accurate and complete. These are hallmarks of accounting. Actionable is also great. But accurate and complete are things that we absolutely have to have. And so that step was skipped. that. And the proprietor, who is an incredible, just visionary leader, very dynamic, very fast moving, went ahead and relied on that dashboard. And I remember one day he was in there clicking buttons. He drew a conclusion. He made a decision. And in the end, I think we lost about $1 million on that.
Thanks.
Yeah. So remediated it, right? Obviously went in, evaluated what connections weren't there. The underlying information had been filtered. So this poor gentleman was looking at instances in which accounts had been paid, not realizing that more than half of the time they hadn't been paid. So just in general, investing in the right resources, that was an expensive lesson, right? So yeah, let's not do that again.
No. It's almost like there needs to be collaboration with that BI tool. Would you look at that?
There was after that. there was a lot of collaboration after that. Lots of focuses on things that previously had not been a big deal.
Right.
Gosh, well, if you're new to FP&A and you're thinking, oh my gosh, I don't know how to get started, here's how. So I would say first, start with your cash flow. Set up a simple rolling cash forecast. Minimum 13 weeks, maximum, I would say probably 26. Anything beyond that's going to be a little much. And then engage your team to gather insights.
And if you're not sure where to start, consider bringing in a fractional CFO or FP&A specialist.
Yeah, because cash flow is just the tip of the iceberg, right? I mean, it's obviously an incredibly important one, but outside of that, we really want to look at ways that we can steer the business. So, like, how can we enhance profitability? What can we do from a pricing perspective? What type of expenses can be mitigated? That's all done really through analysis of good quality, clean, complete information. So that's just the tip of the iceberg. So much fun to be had outside of that. Pro formas, and budgets, projections. Oh my. All right. So hopefully we've made it clear FP&A and forecasting are game changers for any business because they're providing you clarity, confidence, and really control over your future.
And if you're ready to take your business to the next level, we're here to help. At the William Stanley CFO Group, we specialize in turning numbers into strategy and strategy into success.
Oh my gosh, how kitschy is that? Did you use ChatGPT for that, girl? If any of this conversation resonated with challenges that you're facing, we'd love to explore how we can help. With an average return on investment of $1.5 million for every $100,000 invested with us, we specialize in creating transformational change and unlocking potential for businesses like yours. Visit our website, thewilliamstanleycfogroup.com, to dive deeper into our case studies and learn more about what we do. And be sure to follow us on social media, LinkedIn, the Gram, or Facebook, where we will share highlights and actionable insights from this episode. Please don't forget to subscribe to Talk Nerdy to Me on Spotify so you never miss an episode. I think we're up to 13 subscribers.
Oh my goodness.
Oh no, so
lucky
popular.
number 13.
We're here to simplify the complex and empower you to take your business to the next level. Until next time, keep nerding out. And as always, thank you for listening. Okay.
Bye.
Bye.